Welcome to the Opening Bid Podcast. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this is the podcast that will make you a better investor and a smarter leader. Before we get to our featured interview for today, have to do our stock of the day. Let's throw up that 1 minute timer clock. My stock of the day is in fact Tesla. Every day this company is in the news. Shares are down 45% year to date. Investors awake today to see photos floating around X/Twitter, whatever you want to call it, of President Trump getting inside of various, I think it was a red Model 3. I guess he was playing the Republican red vibe there in front of the White House with Elon Musk yesterday. There's a lot of concerns on Tesla's business. That's why ultimately the stock continues to go down. Sales overseas under pressure, sales in the U.S. under pressure. Morgan Stanley, longtime Tesla bull Adam Jonas out with a new note saying that there could be some catalysts coming up for Tesla stock, notably a potential robo-taxi day in a few weeks, a potential day where the company also talks about its Optimus robot. That's all fine and good, but I'm here to say what will get Tesla stock rocking again, or at least not going down in the tank anymore, is sales. It is that next earnings report when Tesla reports in late April. This company needs to get on that earnings call. Elon must say that sales are not going down anymore. There is stabilization. Things are getting better, especially at discounts are starting to hit on these Tesla products. Until he does that, it is very likely that Tesla shares will continue to be under pressure. And I'm out of time. That's why we have the 1 minute countdown clock. But let's keep talking about stocks and markets more broadly. Penny Pennington is here, Edward Jones, CEO. Penny, good to see you and finally meet you in person.
Thank you, Brian. Great to be here with you and your audience.
So I'm not going to ask you about Tesla, but I am going to ask you about markets, because investors are seeing, I think, a lot of turbulence that they were not used to last year. Mm-hmm. Everyone thought, well, stocks only go up and to the right. You and I both know that's not the case. What are they seeing today in markets?
Well, you were right where you started. We've had a couple of pretty sanguine years. And years where we didn't see the usual 2 or 3 pullbacks of 5 to 15%. That's a very typical thing to happen. And so in a moment where we've got uncertainty from policy and tariffs and things like that, the markets are reacting. It was to be expected. And so investors are reacting. Families who have great financial plans put together are saying, okay, do I need to flex my plan? How do I need to think about this? And that's what our financial advisors are there to do, is to help them scenario plan around this uncertainty.
What are they telling those folks, those families that are now opening up their 401ks and wait a second, this isn't what I expected. I had a great past few years in markets, and now, wow, I guess I'm worth less on paper.
Well, one of the things that we would be saying is, we told you this was probably going to happen at some point.
We
right?
didn't want to believe it. Right?
That's exactly right. That's exactly right. So what we say to investors is, let's put in place a plan. And a good plan is better than a bad prediction. Let's put in place a plan, diversification of our investments, balancing multiple goals, ensuring that we are controlling what we can control, the way that we save, the way that we invest, what we borrow and when we borrow, and then flexing that when we need to. Right now, as it relates to investment management, we're being rewarded for diversification in this moment, where a while back, why would I own a bond?
No, you just want to own the top, the Mag 7, call it a day,
exactly.
And get your money and get your Lamborghini.
Why would I invest in European stocks? Diversification really, really works. It works in the long term, and it works in times of uncertainty. So when the market is broadening out, becoming more defensive right now, rotating very quickly from those Mag 7, the promise of diversification really plays out right now.
How does it feel like to you? We've seen various major indices correct. We've seen, I mentioned Tesla top of show, these stocks have really had some major pullbacks. Mag 7 has lagged. Does it feel like this is a rolling correction and it can get worse, or things feel or look wiped or washed out to you?
Let's go back to where we were before this level of uncertainty began. Interest rates were actually at historic levels. A 4 handle on the 10-year Treasury is historically average. Inflation was coming down. We weren't quite at 2%. We'll find out today about the CPI report. Employment is very strong. Consumer spending is robust, and corporate leaders were ready to invest. Now, the reason that I say all that is that's a pretty sanguine view. That's a view of a fairly strong economy. What we see today is that the economy is probably downshifting just a little bit from that level of strength. This uncertainty is forestalling consumers making decisions about new home purchases or renovations or new cars. Corporate leaders are in perhaps a bit of a pause mode right now. I think everything has to do with how long that lasts. If that lasts and becomes a foregone conclusion, while we do not predict a recession, we do expect growth to be pulling back. But the key is we started from a position of strength.
Isn't it? I'm hearing a lot of folks start to talk about recession. I talked to one economist last week, and they said we are in a recession. Do you see signs that we are? Isn't that at all?
Well, that's the thing. You never know you're in a recession until afterwards, right? We don't see that we're in a recession right now, and we don't believe that we're going into a recession. The labor market is strong. Consumers are still spending. Frankly, our investors, our clients are spending at higher rates than they were the past several years. So we see them using the wealth that's been created over the past couple of years. But beginning that pause of, well, I think I'll just wait for a few months until things calm down. And if that begins to cycle for a longer period of time, that's then what sends us into a much lower growth mode.
What have you seen clients rotate into during this turbulence?
Yeah, well, hopefully they were taking our advice all
of
through
course.
this.
I'm sure they were. I'm sure they were.
So Brian, you know how that conversation sounds. We'll be talking with a family, and they'll say, "Why am I not making what the S&P 500 is making? Why haven't I done 20% the last 2 years?" And we remind them that when you do that, you're taking a fair amount of risk, and perhaps the risk tolerance that they shared with us and the goals that we put in place together did not require that they take that much risk. And so in this moment, our clients are saying, wow, I'm not down. I don't feel quite as bad as the headlines are trying to make me feel. I'm not down quite as much because our clients were diversified. They were diversified with fixed income, with equities, with international equities, and hopefully a broader array of equities beyond the Mag 7 here in the U.S.
Yeah, fist bump Edward Jones.
There you go.
I mean, that's some good work there. Are you surprised? You've been doing this for a bit. That everybody just owned the Mag 7, and they still do. While these investors in the Mag 7, they love these names, and they've seen them lose a large amount of value this year, they're still holding on to them. Mm-hmm. I mean, what do you tell people like this?
Well, that's part of diversification. You want to look for investments that are momentum investments that are growing with the trend. Those technology companies are leading the trend associated with technology and the promise of artificial intelligence. Those are great names to own. But Brian, before the broadcast, you and I were talking about being in this business just before the technology bubble burst in 2000. Mm-hmm. People owned the promise of the internet and the Internet of Things at that time, and they were rewarded for that promise. The issue is to over-own those things is taking far too much risk for most families and most investors.
Has a bubble burst? In the Mag 7, I mean, to see Tesla down 45%, Microsoft down double digits, or is this just these stocks letting off some steam?
You're probably better at making that assessment than I am. These are great companies who have built a franchise and have new ideas, innovative ideas, talented people. They are chasing and leading the promise of technology in intersecting with our lives, with business, in different ways than we've seen before. I wouldn't bet against them. I just wouldn't own 80% of my portfolio.
That's a good point. It's hard to bet against NVIDIA. I mean, you read their annual report. I guess you can understand what they do. I mean, this company is like leading in chips. What do you tell, we'll talk more about this after the break, but what do you, I imagine in your position, you talk to other leaders, other high-ranking executives. What's their biggest concerns with how policy is shaking out so far in the first few days of the Trump administration?
What we have to remind ourselves first is to step back and take a breath, lower the temperature. We knew that this administration was going to pursue policies and approaches that were different, that they probably were going to pursue those rapidly, and that there would be a period of change and maybe a little uncertainty. The trick is when we get into that, we forget that we knew that that was going to happen. And so that's why we've got to slow down, step back, take a breath. We are all waiting for a little more certainty and hoping for a little more certainty around things like tariffs. We got some good news last night that it looks like we're coming to reconciliation across the houses of Congress associated with averting a government shutdown.
It's a good thing.
That's
we'll
a good
take it,
thing.
I guess, in this climate.
Yeah, that's exactly right. That would be one more level of uncertainty that we don't need right now.
All right, hang with us, Penny. We're going to be right back on Opening Bid. All right, welcome back to Opening Bid. Having a fun chat here with Penny Pennington, Edward Jones, CEO. There was a big expectation coming into this year that regulation is going to be rolled back, companies were going to do great. And I think to your position, you're on the board of FINRA. Have you heard anything about regulations, let's say in financial services, being rolled back? And if not, when could these things happen? Because I think financial stocks have run in anticipation of that happening, but I haven't really seen any of that so far.
Yeah, well, the promise of deregulation was also one that this administration put forward during the campaign season. That deregulation across a number of different industries is something that corporate leaders and investors felt that there was promise for. We talk a lot about sequence of returns, right? The sequence associated with how the administration would pursue their policies was an important conversation. Would tariffs and cost-cutting government efficiency come first, and then later the promise of deregulation and tax cuts? Or would that be flipped and we would see the promise of deregulation impact the markets positively and a pullback that might be created by tariffs happening later in the year? It's pretty clear what the sequence is. The uncertainty associated with tariffs and cost cutting is impacting the markets more right now. So all of that is to say that deregulation is a market-friendly, a market-desirable stance for the administration to take. And that's going to occur across a number of industries. You really focused it on financial services. The financial services industry has helped Americans, we're a North American company, has helped North Americans establish, build, grow, and pass on wealth for generations. The root of that is growth and innovation, funding new ideas. Our financial services industry and the regulators who regulate that industry try to keep that in balance with protecting consumers and making sure that things don't get out of control. There are some who felt that balance was wrong for the past several years. So as it relates to financial services deregulation, take a look at banking regulation. Conversations around how our banks and financial system are regulated in a way that protects consumers and makes that a sound and safe system. As it relates to the brokerage and investment advisory business, our regulators are in conversation about things especially like cryptocurrency, who should hold that and in what forms. Conversations about the innovation around AI and how it can be used for growth and innovation, but also used in sound and responsible ways that are good for the American investor.
Is it, what you mentioned crypto, and that's the one area where we've seen deregulation to some extent. Is it a sound and responsible thing that we have a Bitcoin reserve? Is it a sound and responsible thing that Edward Jones clients could diversify into an asset that it's just out there somewhere in the sky. You can't see, feel, or touch it. Yeah.
Well, Edward Jones investors can't invest directly in crypto.
Not yet.
Not yet.
Not
now, we said a number of months ago, we wanted to watch this. We wanted to see what was happening in terms of the development of this market. I don't see crypto as an asset class. There is not a fundamental value that stands behind crypto. However, it is becoming an innovation in our marketplace associated with blockchain innovations and that kind of thing. That is a very real thing and will have a positive impact on our industry and on investors. It's a matter of determining the right way to go into those sorts of investments. And I'll get back to the way that we talk to our clients, helping our clients understand what it is. Now, many of our clients say, I want to be a part of what's going on. I want to understand this better. That doesn't mean that you need to invest in it. But understanding it better really is a very smart thing. It's going to be with us. It's going to be part of our financial system, I believe. And it will be the root of innovation associated with things that will become more mainstream over time.
How would an Edward Jones get involved in crypto? I mean, do you see that day happening anytime soon?
I don't want to front run our product review folks and our research folks. That the work that they do for the benefit of our clients is work that I am so proud of and admire a lot. I know that they're watching this very, very carefully. They're looking for places that it does make sense, packaged in the types of products that provide an easier experience for clients. One of the things that I think we've got to be really thoughtful about is clients have an expectation of an experience in an investment management product where they know, for example, that they can get in and out very quickly, that liquidity is there for them, that the price is discoverable and somewhat predictable based on cues that they can see or movement in the market. As I described those things, Brian, you probably are ticking off crypto, for example, against that, or private equity or private credit, for example, and saying, that's quite different from a client experience. Liquidity, predictability, price discovery, those experiences that clients have with a particular asset class or a particular kind of asset are something that we're very thoughtful about as well. And the reason that we're thoughtful about that is that we help clients have an easier ride in the investment markets. Now, that doesn't mean that anybody is promising up or down at a particular level, but the point is to give clients some certainty so that they can take a look at their risk appetite, at the goals that they're setting medium and long term, and have some sense of predictability about the ride they're going to have in the investment markets.
When I think Edward Jones, I think financial advisors, of course. I think longer term wealth building and investing. And that's where we are going to come up here with our hot take. We always love to ask this at the end of our interviews. How do you think the transfer of wealth from boomers to millennials, like myself, yes, I see you out there, my parents, I know you always watch Opening Bid, so this is coming at you for this. How is that going to impact markets longer term?
So the statistics say there's $124 trillion of assets that are going to transfer from the generation who owns them today to the next two generations over the next 20 years or so.
That's a lot of assets.
It's a lot of assets. Here's a remarkable, I love that you just shouted out your parents. Here's a remarkable piece of research. 50% of Americans, one way or another, are going to get something in this wealth transfer.
I don't think I'm getting anything, but just keep going. I'm sorry.
So they'd actually not get anything than to have to talk to their family about it. Yeah. This is a fraught conversation. It's awkward. Do you talk about this at the Thanksgiving table?
You're really in my head, because I was actually thinking about this a week ago. No, I don't want to have this conversation, in part because it's uncomfortable, but I don't want to know the answers. I don't want them to tell me that you're not getting anything because you didn't take out the trash at age 5. I just don't want to hear it. I don't even want to put in that position. And it's morbid, let's just be real.
So this is where a great financial advisor comes into play. They take a little emotion out of this with a family. They describe to a family, you don't have to talk about the dollars and cents, and you don't have to go all the way back to your chores when you were a teenager. What's important in the conversation today is to talk about the legacy that a family is leaving, how they develop those assets, that wealth, what they were thinking about their relationship with money. Teaching the next generation, even people my age, your age, about this is part of family legacy. And that's what we are seeking to do with our clients and our families multi-generationally. We serve 4 or 5 generations of investors at a time today, and helping them move through this process as a family is a very, very rewarding thing for us to be able to do. In fact, it's a privilege. Now, what is happening with this wealth transfer is the face of those who hold that wealth is changing dramatically. Their values, their experiences, how they develop their relationship with money, the kinds of things they want to invest in. And so firms like ours, great firms like ours, are working to stay ahead of that, to really understand what you desire, what the next 2 generations of investors expect and desire. We want to help them form great plans associated with their long-term hopes and dreams.
Well, I will just say this to my parents watching, I expect nothing. I would like some photos, and don't give me any debt. So let's leave it there. Penny Pennington, Edward Jones, CEO, really nice to see you. I mean, it's just really, look forward to staying in touch.
Thank you.
And that's it for the latest episode of Opening Bid. Continue to hit us with those 5 stars on the podcast platforms. Podcast is blowing up. I appreciate the feedback, and hit us with those thumbs up on YouTube. Appreciate the feedback there as well. I always try to answer all of your questions. We'll talk to you soon.